We were just asking you about your latest reporting season. What were some of the challenges and bright spots there?
Well, we have a very good first half, meaning July to December, but things got eroded by the very difficult operating conditions attributable to COVID-19 outbreak. No doubt, retail is particularly difficult because of the severe lockdown restrictions imposed by the Hong Kong government. So as a whole, we had a rather flat year, which is already very gratifying because Sunlight REIT is a balanced REIT with exposure to both office and retail. And while retail has been hampered by the lockdown and also the absence of tourist arrivals, office market remained quite all right. But no doubt, we're entering into a new normalcy whereby consumer behavior, work from home, et cetera, are going to be the key features of our lives. And so as a landlord, we have to respond rather swiftly to these changing market conditions.
So tell us how you plan to weather these uncertainties, given, as you mentioned, you have those retail and also office leasing properties that are under pressure right now, and with more tenants really asking for lower rents. How do you plan to weather the next half a year and until we actually get a vaccine for this pandemic?
Well, our annual report this year for Sunlight REIT is actually called Extending Care. That means in the immediate term, we need to really care for our stakeholders. So we have launched rent relief, promotional campaigns to help out difficult tenants on the one hand. And on the other hand, I want to make sure that our office and retail destinations are safe to visit. So that means disinfection, sanitization, etc. On a more medium-term note, frankly, the outlook will be dependent on the duration of the pandemic. We have seen some bright spots, good news coming on. I think if you know the recent developments in Hong Kong, no doubt the number of infected cases have been gradually going down, and there are a little bit of relaxation already been implemented. And so we think that we're going to have a better final quarter of 2020, and hopefully things will go a little more smoother. Going forward, as I mentioned, in facing this new normalcy, we need to investing into environmental enhancements, prop tech enhancements, and also trade mix optimization, such that we will have a more balanced exposure to various trades or tenants, which can be more productive also in the middle of this change. But having said all that, Sunlight REIT has always been a balanced landlord, so to speak. 50% of our retail assets are community-driven retail assets. The rest of the assets are basically defensive, decentralized properties, which are very affordable.
Keith, the pandemic may go and pass. It's just a matter of time and a vaccine. But the political issues and the sort of existential crisis that Hong Kong faces looks to be long-term. Do you think the property market will survive that aspect of the uncertainty?
Well, if you look at the past 12 or 15 months of Hong Kong, yes, it's been affected by the social unrest and a bit of a political uncertainty. But I think you can see residential property prices remain in vogue. And in the meantime, I think the COVID-19 outbreak had a much more severe impact as compared to the social unrest. That's our business experience over the past 15 months. I mean, going forward, I think that Hong Kong, yes, it may be a little bit confused by the political developments, different aspects of lives. But on the other hand, I think if we are sticking to community spending, I think that's still very much in vogue, and the stances remains unchanged.